Brilliant one right there. Brilliant one right there. Brilliant idea right there. Okay, so when we talk about trading confluence, think of it as a block, okay, a building block. For a building block to be ready, you need to mix different type of things to hold it together. You mix cement, you mix sand, you mix water. That is confluence. More reasons for something to stick together. In trading, there's going to be more reason for something to happen in the markets. Let's dive right into the slide. Okay, let's dive right into the slide. In this session, we will be going through overview of a trading confluence, advantages and disadvantages of a trading confluence, finding the right trading confluence balance, how to trade confluence, why you should use confluences when trading. Let's dive right into it. Understanding trading confluence. According to the dictionary, okay, according to a dictionary, confluence refers to emerging or flowing together, okay? Emerging or flowing together. Things coming together or things moving together. Or a gathering together, coming together also. See, in trading, confluence refers to any circumstance where you see multiple trade signals lining up on your chart telling you to take a trade. Multiple trade signals, multiple reasons on your chart telling you to take a trade. Simple. It means looking for two or sometimes more signs that you found a safe opportunity. The key word is safe. High probability. Safe. High probability. Okay? Safe opportunity to buy or sell. You don't want to click your button, your buy or sell buttons every single time you see an opportunity. You want to settle for grade A, grade A or grade 1. Grade A or grade 1 in the global financial market is high probability trade setups. Usually, these are technical indicators, or sometimes they may be price pattern. Now, let me tell you something. When looking for confluence, it doesn't have to be indicators alone. It doesn't have to be indicators alone. It could be price patterns. It could be indicators, moving averages, and RSI. It could be combination of chart patterns, and it could be anything at all. Just something that gives you more reason to trade that financial instrument. That is what it means. That is simply what it means. And you don't need to stress about confluences at all. You don't need to try to rack your brains to look for confluences on your chart. When you see a confluence, you will know that this is a confluence. When you see a confluence, you would know that this is a confluence because you see it clearly. You see clearly that this is a confluence. Let me take this trade. You see clearly that this is a confluence. Let me take this trade. Advantages of trading confluence. Okay. Confluence is one of the most critical aspects for success in technical trading. Everything we do is technical. Okay, everything we do every single Thursday on the webinars is technical, and confluence is the most critical aspect. I didn't say most important, I used most critical. Okay, because for you to be profitable, to make money, you need to have more reasons to take that trade so you can make money. Confluence allows traders to identify the right opportunities by multiple factors that combine and help you to significantly reduce the risk when you place a trade. Okay, it allows you to identify the right. I didn't say it helps you to identify the opportunity by multiple factors. I said the right opportunities by multiple factors, multiple reasons. Multiple reasons, and it helps you reduce your risk significantly. You see, some people place a trade 30 pips stop loss, 20 pips profit. How do you calculate such risk? That is not even up to 1-to-1 risk to reward ratio. When using Confluence, it's going to help you reduce your risk, whereas you'll be using like a 20 to 10 pips stop loss, and you'll be aiming for pips such as 50 pips and more. Okay? Trading Confluence improves the reward to risk balance through the following process. If you are not taking notes on this webinar, you are making a big mistake. Get a pen and paper, take notes, take lots of notes, take lots and lots of notes. Because every single thing we are discussing today would help you or would shoot your trading profitability into space as wild as you can think. Okay, so firstly, each tool or indicator has an expected win rate, an expected reward to risk, expected drawdown. Every tool or indicator you use in Confluence will tell you the win rate, will tell you the risk to reward. It will also tell you the drawdown you are to expect. Once you understand these things, you will avoid making mistakes. You know, some there are mistakes and there are silly mistakes. It will help you avoid making the normal mistakes and the silly mistakes that comes with trading, like mistakenly using a wrong lot size, like mistakenly opening two positions into than one. You already know this is the plan that the Confluence is bringing. This is what I should do. If I do any of this thing, I've done something wrong. Okay. So secondly, by combining tools and indicators, see, as a trader, you can eliminate weakness of each tool and indicator when used separately. There are traders that use RSI alone. There are traders that use MACD alone. There are traders that use moving averages alone. There are traders that use everything together. That is me. It will help me eliminate the sluggishness of RSI. Will help me eliminate the sluggishness of moving average. Moving average will help me eliminate the false overbought and over signal of RSI. That means they are giving me two good things, two good reasons to use them together. MACD will help me eliminate the sluggishness of average crossover. MACD will also help me eliminate the sluggishness. You see, when we combine tools together, weaknesses of each other and give you more reason that trade. See, in other words, as a trader, to effectively decrease reliance use Confluences, because it is important. Trading with Confluence is important. It's going to help you target your trading edge, your profitability rate. Are we all following? Are we all following? Please drop something in the chat box. Let me know you're following what I'm saying. Let me know, okay? Are we all following? Drop something. Just drop a yes or a no in the chat box. Are we all following? Okay, good, good. Let's continue. Disadvantages of trading Confluence. See, for all its advantages, Confluence has its cons, okay, that's its disadvantages also. Especially as a new trader, when you start combining too many tools and indicators, okay? When this happens, the following happens. Chances of all tools and indicators being aligned are far smaller. Okay, instead of them to tell you the original mistakes with the signals you get, start making mistakes with the signal or the signals you see on the chart. You don't know which one to follow from the indicator. That's why at most 3 indicators on your chart. The chart simplicity and clarity may lead to analysis paralysis. When you have too many indicators starts from 4, 5, 6, 7, 8. It's too much. You only need theory with price to make money. That's just the disadvantage because when you start sharing charts now and there's too many indicators, nobody wants to pay attention to you. They don't nobody will take you serious. Nobody. Because they think you're one of those indicator guys, you lack simple price. You're just trying to use your own method and metrics to trade. Come on. Okay, so striking the perfect trading coins Libra. Confluence equilibrium. Now, finding the perfect balance when trading conferences cannot be overstated. Okay, it can never be overemphasized. It can never be underemphasized. It has to be more than overemphasized. Okay, because a lot of factors comes into finding the perfect balance when using conference. Such balance needs to be found in various elements, like I said, in various elements, such as number one, the number of tools and indicators used. See, keep it minimum. Don't, I know, yes, you want to make a lot of profits. Keep it minimum. Keep the indicators minimum. Three at most. You have price there. Okay. Price is not enough sometimes. You need more confluence. Keep it at three at most. How many tools and indicators needs to be aligned? What and what do you want to see before you place that trade? This is how some people used to miss trade. This is how they used to miss trade, and I'll tell you how. They actually wait for all the indicators to align. The truth is, all these indicators can't align together at the same time. Some will be fast, some will be slow. So just tell yourself, I need only three of these indicators, or the three of them to align, or two of them to align with price. Then I take my trade. You need to have a trading plan also. For example, find three reasons to take the trade. Did the trade break market structure? Did moving average cross to the downside? Is RSI overbought? Or is the MACD overbought? Or is the MACD giving you a bearish divergence? These are one of the things, one of the very, very little things you need to have, the questions you need to ask yourself to be able to strike a perfect trading confluence equilibrium. How to trade confluence? I'm going to show you on the chart real quick. Okay, you can trade confluence in many different ways. I cannot overemphasize this. You can trade confluence in many different ways. However, as with all things trading, what might work for you might not work for me. Okay, might not work for another trader, and what might work for another trader might not work for you. These are just one of those things I want you to understand, which is why it is imperative to try out a variety of strategies until you find the right method that works for you. Some of the techniques you can apply are trend line confluence trading, support and resistance confluence trading, Fibonacci confluence trading. Let me show you this on a real-time chart. So let me load my MT4 chart for you to see. And I'll show you these three things on one single chart or two single charts and show you how well they work, how interesting they work. Okay, so I'm trying to load my MT4. Trying to load my MT4. It's loading. Wow. Okay, trying to load the MT4 again. It's actually closed. We'll load the MT4 right now. It's loading. Can you see my screen, please? If you can see my screen, please let me know. If you can see my screen, please let me know. Thank you very, very much. If you can see my empty full screen, please let me know. I'm seeing it here. I'm not sure you guys can see it. If you can see my empty full screen, please let me know. Thank you very much. So I'm sharing my screen right now again for the second or third time right now. If you can see it, please let me know. Can you see my screen now, please? Do let me know if you can see it, okay? If you can see it, do let me know. Thank you very, very much. Okay? Trying to actually make a few adjustments. Okay, great. Now let me show you the first one, trend line confluence. Okay, trend line confluence can be used in many ways, in many ways. So I'll show you confluences in many ways. Now look at this. This is ERGPY. Okay, this is ERGPY. This is ERGPY. What do we have right here? You can see how nicely every time price came into the trend line, price went down. This is price and trend line confluence. Price and trend line confluence. Now, let's say you already have this trend line confluence and you want more reason. You can now decide to add what? Support and resistance confluence. You already have price, you already have trend line. You can now decide to add support and resistance to it. Now, let me show you support and resistance. This is resistance here. Let me change the color to gray. This is resistance. So you can see price rejected from here. This is where you would have gotten in on your trade. Let's say, for instance, you missed that one also. Right here. Right here. This is what? Resistance and trend line. Two confluences together at the same time. Now, if you want to take a trade next, where will you be looking for price to come? You'll be looking at price to come here before it goes down. Right? What are the confluences? The confluences basically, this is too big. This is it right there. This is support here, turn resistance here. You're expecting price to come into the resistance now and go down, plus the trend line. You see how easy it is. How easy it is. Now let's now add Fibonacci to it again. And I'll add one more extra. This is the highest point and this is the lowest point. What does it say? It aligns with what? 50 and 68%, 61.8% range level right there. So you see, this is more confluence that whenever that is giving you a heads up. If price comes here, you will be looking to sell it hard. Okay. Now let's take for instance now, after all of this, you now want to say, okay, you need an indicator on your chart to be able to be fully aware that you can take this trade. You now decide to add a moving average. You now add the 18 and 9 exponential moving average. Now, the first thing is this moving average has crossed down. It is telling you that tendencies for price to go down very, very high. You now decide to add another moving average, which is the 9. Let's make it color green. Now, to just cross over here, this is now giving you more confidence that the downtrend is likely to happen. Now, all you need to do is to just wait for price to possibly move into this area, then you sell. That is how confluence works. It is not difficult. This is how it works. every single time. It is not difficult at all. It is not, I repeat, it is not difficult at all. It is not difficult at all. This is how Confluence works every single time when trading. This is how it works every single time when trading. Let's go to ERUSD. Let's look for another one on ERUSD. This is ERUSD here. Come, let me just. Okay, now this is ERUSD here now. Look at ERUSD. We have what? A trend line here. And what? Okay, let's use an equidistant channel. Let's use an equidistant channel. Just a trend line channel. Let's use a trend line channel. Let's add it from the low. Let's add it right there. Okay. Let's turn off the ray. Okay. Yeah. So what if you are looking for selling opportunities? Where will you be looking for selling opportunities? You'll be looking for selling opportunities somewhere around here. Let me mark it out with an arrow. Somewhere around here. Now, what is here? We have what? Resistance right there. An area of resistance or an area of supply. Okay, right there. So tendencies of price coming into this area, then dropping is high. One, the equidistance channel. Two Confluence. The last one will be our what? Fibonacci, which is what? The 71 point something percent fib level right here, which is telling you that price is going to what? Go up before coming what? Down. So you see how easy it is. Now let's take for instance, you want to buy this. What we have here is what? We have what? An area of support. Okay, price has bounced into the support, it is going up. Another thing we can say is this is the low of a trend line. More reason to buy. So you can even buy before you sell. You see how easy Confluence trading is. Now that you've seen these techniques, let's go to the slide. Reasons to use Confluence when trading. These reasons are important. Very, 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 very important. I cannot overemphasize the importance of using Confluences when trading. I cannot overemphasize its importance. Now, number one, it improves consistency. By incorporating Confluence into your strategy, you can be more precise. You see, more precise with your trades and be more consistent. Consistency is how trader millionaires are made. Once you can repeat the process, once you can repeat the trading process over and over again, once you can repeat the trading process over and over again, you tend to become consistent with profit making in the market. You tend to become very, 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 very consistent with in the markets. Sincere apologies for the break in connection, actually. Very, very sorry for the break in connection. So let's take it from reasons to use confluences when trading, okay? So it improves consistency, okay? It improves consistency. See, by incorporating confluence into your strategy, you can be more precise with your trades and thus be more consistent. Consistency is how trader millionaires are made. See, when you use or when you implement confluences in trading, it helps you better your edge. It helps you better your win rate. Your win rate is all about consistency. You rinsing and repeat and doing the same thing over and over again. Okay, it's all about you rinsing and repeating and doing the same thing on the charts in trading over and over and over and over again because that is what it's about. That is what it is really about. That is what it is really about. You improving your consistency and doing it over and over again to make more money. Because if you can repeat the same process over and over again, you'll make millions and millions and millions of money when you trade global financial markets. Second, it increases your confidence. Have you ever been in that situation where even if you have a very, very good trade setup, you don't want to take it? Has anybody been in that position before? Yes or no? Has anybody been in that position before? If you've been in that position, Kingsley, Yaku, Olarewaju, have you been in that position before where you have a very, 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 very good trade setup and you can't take it because you're scared? Have you ever been in that situation before? Drop a message in the chat box if you've been in that situation before. Yes. And if you've not been in that situation before, drop a no in the chat box, okay? Real quick, let me know you're following with me, okay? Let me know you're following. I just sent out a poll right now. Let's do well to respond to it, okay? Let's do well to respond to it. Are we all following? Let's do well to respond to the poll. Thank you very, very much, okay? So if you've been in that situation before, it's because of you are not confident enough to take the trade. It is basically because you are not confident enough to take the trade. See, confluence gives you the extra confidence to make a trade since you are combining a huge number of factors. A huge number of factors. Since you're combining a huge number of factors, confluence gives you that confidence. Confluence gives you confidence. Brilliant word right there, okay? And confidence, like in sports, is important when placing trade. When you lack confidence as a trader, you stop caring if your trade is successful or not, and that you can lead to series of poor trades. It can basically lead to series of poor trades. It can lead to series of poor trades if you lack confidence when trading. Okay, if you lack confidence when you trade, it will lead to series of poor trades decision made. Now, in conclusion, trading is simply one of the many technical analysis methods of looking at price of different assets and trading it. The real concept is to be able to use it when it comes to confluence, to be able to use confluence to sieve high probability trades from the low probability ones by merging many reasons on a chart. So this brings us to the end of today's